Good morning. It's Friday, May 23rd. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So yesterday we sent out a special video and technical update on the silver market with the volatility that we saw. We're going to continue to highlight some fundamental and technical changes and give you some insights into the trading ideas that we're implementing. Those updates are only going to be available in the portal and available to clients. If you'd like to become a client, email info@bluelinefutures.com and be sure to sign up for the chart pack in the description below. Like for instance, here we saw a wild move in the copper market in the overnight session, and there was an earthquake in a key copper producing region. Now, those are the types of updates that we're going to provide to clients when you get a market moving event similar to that. Also, we'll highlight some of the technicals that are involved with it. So like yesterday, we highlighted in that silver video some of the key areas of support and resistance in the silver market. So let's check in on the equities here, some of the market moving headlines here in the overnight price action. So we do have US stock futures. They are a little changed here as treasuries, they rebounded, helping temper some of those concerns about America's fiscal outlook. We did have another bond auction, and the bond auction was better perceived and well recognized compared to Thursdays, which sent the markets in a volatile event and trading affair. So the dollar index here is continuing its decline, weakening about 0.5%, and put on course for the worst week for more than a month here amid the concerns of that U.S. economic outlook. We do have gold headed for its biggest weekly gain in more than a month, while oil is headed for its first weekly decline in 3 as OPEC Plus weighs in another bumper production increase here. So looking at that next meeting here, we're going to want to identify here when that date is here and look at crude oil, where it is technically coming into that type of development. We did see Asian equities also on track for their sixth straight week of gains, but trading volumes are light across the board. It is a full trading day here today. Sunday night, many of the markets open up. They halt early on, and then Monday we will have some of the markets closed. If you'd like to get a calendar here of what the events that are coming out, we will send that out here as far as market hours from different exchanges to our clients. Now, looking at economic data here today, we do have new home sales, and we'll also have those month-over-month new home sales coming out at about 9 a.m. Central Time. You are going to have a few Fed speakers coming out. The one that I'll be watching at 7:30 a.m. is Fed Goolsbee. He'll appear on CNBC. Now, looking at the precious metals overnight, you got a 1% move in the gold market. You got silver slightly muted, again, weighed in by those developments here yesterday that we highlighted in the video. You have copper futures up over 0.5%, hitting about 474.90. That's up at that upper resistance band, kind of intraday resistance, not really long-term technical resistance. And you have platinum futures continuing to accelerate higher, just getting over that 1100 mark. Now, gold is headed for its biggest weekly gain in over a month. It's really driven by those concerns about the U.S. fiscal deficit, which has boosted the metal's appeal. The bullion surged more than 25% year to date, trading about $200 below its all-time high that was achieved last month. Central banks have been consistent buyers of gold, and they are seeking to diversify their reserves. I really expect gold to be range bound here, identifying back about a week and a half ago, I said that I felt that we were going to break down into key levels of support here, coming down to that 3150 to 3120, that key technical zone here, and bouncing back up to about the 3350, and that's where we're closing in on here. I think that the concern, though, is that the lower highs you're seeing on the chart. So if you look at the all-time high, you look at that second level of high, we need to see how gold reacts around these next levels here. You have a lot of people that are also looking at hedging a lot of their gold production, some of their gold holdings and things like that. So that's where you get the downward pressure on the market here, and the upward pressure would come from those ETF flows. Now, you do have platinum futures rallying to a 2-year high. So the overnight session getting to 1104.80. A lot of times these markets want to probe key psychological areas here, hit a lot of stop losses and things like that. And that's where the market here had traded in the overnight session, just above that 1100 mark. We're up about 1.37% on the overnight session, with palladium taking a bit of a pause, down just about 0.75%. Now, if you didn't catch the story on platinum, it was just renewed jewelry demand in China. So Chinese jewelry and investors imported about 11.5 tons of platinum in April. That's the most in a year due to its relative stability that we've seen in prices. Remember, platinum futures have been about the $900 to $1,000 mark for quite a while. So what you saw was a switch from the retail person that's going out and buying jewelry and things like that. So they rotated out of gold and they are starting to purchase platinum. So the growing demand for platinum threatens to deplete those over above ground stockpiles, with the market expected to remain tight through June and July and prices rallying about 10% so far this year. You look at the ETF flows, because that's going to be an important component towards whether or not gold can continue to sustain this type of rally, and then the silver market as well. So the exchange traded funds, they added about 100,000 troy ounces gold holdings in the previous trading session. That was the biggest one-day increase since April 21st. Now the key level that we want to watch on the gold silver ratio, again 97-1, that was on April 23rd. The ratio here sits at about 100-1 right now. So the ETFs, they added 435,000 troy ounces of silver holdings in the previous trading session. So if we can continue to see silver ETF flows really break and start to match last November's highs, that's where I believe we get the break above the $35, and then there's an upward parallel channel that would come in right around that $36 to $38 mark here, depending on how soon it occurs here, and then that would be an upside potential target. So you look at the year-to-date percentage change, gold up 6.1%, small increase, silver up 2.7%, and then you look at crude oil futures here. Crude oil futures rallying back here, and we are seeing some news flows out there with Russia and things like that, the Middle East. But really, its oil has declined for about 4 straight sessions. So OPEC Plus is considering another production increase that could add to a market that's already feeling quite a bit of supply out there. So crude's down about 14% year to date, hitting the lowest since 2021 due to those increasing supply expectations and also tariffs hitting a bit of demand. So that OPEC Plus meeting is going to be June 1st here, where they're going to talk about another output hike. Now, a couple markets on my radar. One has been the wheat market. Many of you have been involved with that. The live cattle market, feeder cattle, sugar, palladium. So there's a lot more commodities out there than just gold and silver. So be aware of that. In a lot of these markets, remember, they're global and they're dynamic, and they all tend to impact one another. Like, how can live cattle impact the price of gold? Well, prices of beef affect inflation. Inflation going up can play a role on the economy and things like that. So the 27 major commodities really interact with each other, and that's why, again, I believe that it's very important to have a futures trading account. Many people are nervous about leverage and things like that, but I could tell you that the market has changed, the dynamics of the futures markets over the last 20 years, where they've implemented much smaller contract sizes down to mini and micro contracts on many of these things here. And of course there's risk of loss involved, but someone who is interested in things like, say, gold, for instance, and gold futures, there is a 100-ounce, 10-ounce, 1-ounce contract. Silver, you've got the 1,000-ounce contract. Copper, you've got 2,500 tons as opposed to the 25,000 tons. You've got multiple layers of different contract sizes on the agricultural markets, the currencies, the energy markets with the 1,000, the 500 barrel, the 100 barrel crude oil contracts. So there's just a lot of different ways to structure your risk management within the futures and commodities markets here. And then remember, these markets are very liquid, nearly 23 hours a day, whereas on the ETF side and on the mining operations and things like that, you're going to be strapped into when those markets are open, the 8:30 open on up to the 3 p.m. closes and things like that, where you can't take advantage of some of these outside moves. Again, and then you think about miners and stuff. I wonder how some of those mines are performing, although they trade on different exchanges, that are coming under pressure and completely halted from earthquakes that produce these things like cobalt and also copper. So you want to really be long the underlying as opposed to companies which face multiple layers of risk. So that's just my opinion and a small rant there on the mining operations. But you guys got any questions? Have a great weekend. Reach out to me anytime. I'll be on the Schwab Network here later on today, give a breakdown on what I'm seeing here next week and some key developments and a lot of commodities. And then again, we're going to start shooting these private videos and sending them out on these specific markets here, and it's going to be way outside of the gold and the silver market here. Like palladium, for instance, was one that we were looking at, an option spread. I could go on and describe how that option spread works, some of the key drivers, break down the technicals of what we're looking at, and the risk parameters involved with those particular types of trades. So if you like, again, if you're interested, send an email to info@bluelionfutures.com, register for the chart pack. Have a great weekend. And remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck. Go get them.